PMI removal appraisals. PMI, the acronym for Private Mortgage Insurance, allows individuals to purchase their home with less than a 20% down payment. If you are paying PMI, the question you need to ask yourself is it time to stop paying monthly PMI into an escrow account, and instead start putting that money into my pocket? Every month, if you're like most of us, you dutifully make your mortgage payment. Have you ever given any thought to exactly what makes up your monthly payment? For most of us, the mortgage payment not only pays off the mortgage loan, but a portion also gets put into an escrow account to pay for real estate taxes and a variety of different types of insurance. If you purchased your home with conventional financing and put less than 20% down, it's likely you're paying PMI. Private mortgage insurance protects the lender, or investor, against loss if a borrower stops making payments. Often, homeowners mistakenly pay this insurance years after it's no longer needed, and as a result, end up paying thousands in useless insurance premiums. Here's the good news that many homeowners don't realize. Once you've reached 20% equity in your home by appreciation, improvements made to the home, or by paying down the principal balance of the mortgage, you can force the lender to cancel the private mortgage insurance. All you have to do is request in writing that the private mortgage insurance be canceled, and provide the lender with proof of sufficient equity over 20%. In most cases, the necessary proof is a state-certified appraisal. Recent legislation requires servicing lenders to make homeowners aware of the existence of any PMI they might be paying for, and the requirements necessary to have it cancelled. Fortunately, you don't have to wait for the lender's notification to rid yourself of PMI. In most cases, if you have equity of 20% or more, you'll be able to cancel it almost immediately. PMI is not required in all instances. The general rule is that if a homeowner has put down less than 20% down on a home purchase, mortgage insurance will be required. Homes purchased with a down payment of at least 20% should have enough equity to cover any potential losses by the lender, so PMI is generally not required. There has been a surge in the mortgage insurance industry because of the popularity of purchasing homes with less than 20% down. MICA claims that because of mortgage insurance making up for the down payment difference, over 15 million Americans have been able to purchase homes over the past 4 decades. PMI does not protect a homeowner against loss, so a borrower that's required to purchase it will probably never deal with the mortgage insurance company itself. All dealings concerning mortgage insurance are usually handled by the lender. It's also the lender who has the ultimate decision when it comes to mortgage insurance, meaning how much, and when, the homeowner has built up enough equity in the property to drop the insurance. Therefore, one must remain in contact with the lending institution which services their mortgage, to inquire about this type of insurance and the requirements necessary to have it cancelled. After a homeowner has built up 20% equity for a single-family owner-occupied residence in the home, they may begin to initiate steps towards canceling the mortgage insurance. Note: a few banks may require as much as 25% equity. Check your loan documents to ascertain what applies in your situation. Keep in mind it's the servicer's ultimate decision, and they'll take many factors into consideration, including the borrower's payment history over the life of the loan before allowing you to drop this insurance. This factor alone could alter the servicer's decision. This may, or may not be, the lender who gave you the loan originally. Your loan servicer will be able to help you with the cancellation procedure and will also be able to tell you exactly how much your remaining mortgage balance is. Every loan servicing institution can have different policies regarding this procedure. Ask your servicing lender to provide in writing their specific requirements to cancel PMI insurance. Keep in mind it's the servicer's ultimate decision, and they'll take many factors into consideration, including the borrower's payment history over the life of the loan before allowing you to drop this insurance. This factor alone could alter the servicer's decision. Although mortgage insurance may have allowed you to purchase a home, there will come a time when this added monthly expense will no longer directly benefit you. Therefore, it's in your best interest to keep the provisions surrounding its cancellation in mind, because no one is going to cancel it for you. You are, ultimately, your own financial advisor, and even the smallest expenses should be eliminated if at all possible. By continuing to carry PMI, which is no longer required, nor needed, only decreases the amount of money you have available in your pocket or your bank account. Most lenders require a real estate appraisal by a state-certified appraiser as the primary proof required to eliminate unnecessary PMI insurance. At Appraisal Appraisal Services, we specialize in helping people just like you rid themselves of unneeded and unwanted PMI insurance. We offer a free initial consultation and will help you to determine if you have sufficient equity in your home to enable you to cancel your PMI. Give us a call today with any questions you might have, and also check out our testimonials and reviews page and see what others are saying about Appraisal Appraisal Services. We would like to thank you for stopping by, and if you have any questions or would like a free consultation, feel free to give us a call at 412-831-1500. Again, thank you for stopping by.